Now, what I would like to show you at this point is how can you tell what direction you should be trading to? Should you be trading to the upside or to the downside? How can you actually know? Well, you can actually use indicators. Indicators will tell you where the market is trending to. For example, you could use an indicator like a relative strength index. This might sound it might look very unfamiliar because I know most of us have not used it before, but this is TradingView. And I just wanted to show us something here with the use of indicators. And I have the relative strength index opened here. What this indicator does is to give you an idea of the momentum of the market. And the momentum of the market is actually the number of traders that are actually buying and the number of traders that are actually selling. So this is actually Ethereum, Ether here. And I'll explain this later, but it's just to give you an idea of what this is. If you're using this indicator and you want to actually know if you should be selling or if you should be buying, you should just look at the relative strength index. It gives you an idea of Ethereum, whether it's being overbought or oversold. For example, if Ethereum is overbought, then you should be longing. And you can see this region here. The RSI here is pointed to from this point, it's above 50. Once it's above 50, then Ethereum is overbought. That means people are buying Ethereum. If it's below 25, like here, 33 is not bad. But if you're looking at this region here, and it's somewhere at 25 or 23, then Ethereum is oversold. And what it means by being oversold is people are actually selling massively. So I'm just showing you this. I'm going to explain more about it, but I'm just giving you an idea of how you can know that Ethereum is going to fall in price or it's going to go up in price. If it's overbought, then it's going to go up in price. If it's oversold, then it's going to fall in price. So if you know it's going to fall in price, then you know you should be shorting the market or trading to the downside. But if it's overbought above 30 to the upside, then you should know you should be going long. A lot of persons are buying Ethereum. But as for the indicators, a session of the class will be about indicators to help us fully understand what indicators are and how you can use them. One thing I would just like to show you quickly before the session ends is using indicators is actually it's not too difficult when I teach everyone how to make use of them. And I'm also going to show everyone how to understand candlestick patterns. Candlestick patterns will actually help you to know if the price is going to go up or if it's about to fall or if it's about to go up. Let me just give an example of making use of candlestick patterns to know if the price is going to go up or if the price is going to go down. Let me just make use of this here. Let me increase the time frame. Let me use 1 week. So what I actually want to show you with this is there is actually a way you can read candlestick patterns, and it will help you to understand whether the market is going to fall or whether the market is going to go up. This is really very useful because if you're reading candlesticks, then it helps you to see what is happening in the market. Most persons or some persons who don't know how to trade may not be able to use this data by reading candlesticks, but that's the advantage you have. In a session of the course, I'm going to show everyone how to read candlesticks and use indicators. And if you're reading candlesticks, you're using indicators, and you're using something else I'm going to show you really quickly, it will help you to always know where the trend of the market is going. So let me just show you real quickly. If we're looking at this pattern here, this candlestick pattern. This pattern that goes like this particular one here, what letter of the alphabet does it look like? Maybe someone can just quickly
Looks like
looks like what?
looks like M.
Very good, very good. It looks like M. This is actually a bearish pattern, M, when you're looking at candlesticks. So if you're trading and you're looking, you want to know at what point should I be entering the market? Should I be shorting or should I be going long? You can use, one way is to read candlestick. So if you're looking at this here, let me just use a trend line so everyone can really see what we're talking about. From here, notice it went from here and it went to here. It went like this. So this is actually what it looks like. So this is a bearish pattern, M. So when you're trading and you want to know what direction should I be trading to, if you want to read candlesticks to know, you look out for something like this. Is it forming a bearish pattern? A bearish pattern means the price is going to go down. That's a bearish pattern. And then a bullish pattern is the price is going to go up. So if you were trading and you wanted to know what direction should I trade to, should I trade to the upside or to the downside, and you're seeing this formation, the candlesticks is forming like this, going like this, and it comes down. Once it makes the next move here, that tells you it may likely form a bearish pattern. They call this double top because it has two top, one at this point and one at this point. So if you want to use the candlestick to read where the market is going to, maybe you want to trade and you want to know, should I be shorting, should I be trading to the downside? You can read candlesticks, and if you see it's forming a double top, a bearish pattern, then you just wait for a confirmation somewhere around here in this point. If you see another red candlestick opening just after this red candlesticks, then that tells you that it's likely going to be a bearish pattern, and that means the price is likely going to go down. And whenever you're reading candlesticks like this, it's always very accurate, because if it gives you a bearish pattern, the price must go down. But there is also another way you can look at the market when you would see a bullish pattern telling you should be trading to the upside. Let me look for a data that I could use for that. Let me switch to 4 hours just real quickly to see if it has that data. All right, I think we could make use of this. All right. Okay, so if we look at this particular candlestick from this region, what letter of the alphabet does it form? Someone can comment real quickly. All right, can we see what I'm pointing to? This region around here, from here, this circle I'm forming with my mouse. What alphabet does it look like? Does it look like M or does it look like W?
Well, it looks like W.
Yeah, so that's a bullish pattern. So if you're trading and you want to know, should I be going long, and you were looking at the market, remember we talked about bearish pattern, the double top, which is the bearish pattern, it looks like M. But if you're trading and you see the candlestick goes down like this and you're wondering, should I be going long? That is, should I trade to the upside? Should I be buying to go long? And you want to use candlestick to determine that, you simply come to the candlestick and look at what pattern is it forming. If it goes down like this and it goes up, you've not entered the trade, you want to really be sure what you should be doing. If you see it going down and it goes up again and you say, okay, this is looking good, but I want to be sure, I want to know what formation it's forming, and you see a red candlestick going down and you see a green candlestick coming up just after the red candlestick, and you just wait, you say, okay, I want to be sure, and you see another green candlestick opening after the previous green, then that tells you that it's forming a double bottom. Double bottom, this is one bottom and this is another one, because it went from here like this, formed one bottom by going up like a V shape, and then it went down again and it's going up. It has formed another bottom. So when you're seeing a double bottom, that tells you that the price wants to go up. And remember the strategy we talked about. If you're using a strategy and you're seeing this like this and it has formed a double bottom, price action isn't really moving really nicely here. So you could say, okay, if Ethereum moves like $5 or $4 or $3, then I just want to quickly take profit because I've spotted this bullish move, this bullish candlestick. And you notice it went from this point. If you had entered somewhere here because you've seen the move 248 and you got out at 256, you've really made good profit. So that's one way you can actually use candlestick patterns to know what direction the market is going. Is it falling? So if you've seen that it's falling, then you should be shorting the market, knowing that the market is going to fall. And then if you're seeing a bullish candlestick, that is, it's forming a double bottom, then you know you should be longing. So keep in mind that your strategy, once you're using your strategy and you're reading the candlesticks, then it will really help you to know where the price is going. Is it going down or is it going up? But this is just a quick sneak peek into candlesticks. In other sessions, we'll be going into detail, and I'm also going to give you some tools. When I say tools, I mean, you can easily forget this sometimes, but I'm going to give you something that can help you to always remember the different patterns that you can read and look at that tells you where the market is moving to. And you could also use moving averages. These moving averages, you notice this line is going down. So if you're trading and you see it crosses to the upside and then it's going down and it continues to go down, then you know, oh, this price is actually going down. And then you simply exit. And same thing for here. It was going up, then it started, this red line is a moving average, started going down, then that tells you, oh, this price is coming down. Then you can actually quickly short. If you want to swing quickly and get out, you can actually short from here, 244, and then it went down to 236. So if you were shorting, you could have made profit from there. And then when it was going up, you can also notice that the formation of the candlestick is similar to the moving average, to this red moving average. You can see the line from here, it's going down and it looks like a W somewhere and it's pointing to the upside. And what you notice here is this red line is crossing the yellow, it's going up. So that also tells you that the price is going up. So you can quickly long the market and take profit quickly once you read the candlestick and the moving averages. So that's just a quick way to tell what direction you should be trading to. More details about that will be covered in other sessions of the class. And lastly, what I want to show you here is coin farm. Now this place is really very useful. You'd be surprised at what you're going to see right now in a few seconds. So let's just wait while it loads. Now, this is what you're looking at. This is really very interesting. How many of us, Mr. Elochukwu is a trader. He has been trading, same with Victor. But I'd just like to know, how many of us have used coin farm before?
Not coin farm, but I've used another application that's similar.
All right. So the usefulness of this actually is, if you're trading, like for me, I like to use many different methods to know what direction I should be trading to. Is it to the upside or is it to the downside? I like to use coin farm because this is actually Bitcoin chart. The beauty of coin farm is it tells you the percentage of people who are longing, going long, and the people who are going short. This is really very useful because if you've read candlesticks and you still want to be sure, like, okay, should I be going long or should I be going short? I really want to know. I really want to be sure. You can just excuse me. You can simply check CoinFarm, and it gives you all the data you need. So it tells you here that people who are shorting Bitcoin right now are superior to people who are going long of Bitcoin. Remember, we said shorting is people who are trading to the downside. They are trading that Bitcoin is going to fall in price. People who are going long are people who are trading to the upside, trading that okay, Bitcoin is going to go up in price. So the superiority of people who are shorting Bitcoin is with a margin of $118 million. So that tells you that the shorts are in charge of the market right now, 50.95%. Not really big, it's not a big difference. And this is actually the reason why, if you have noticed in the last 24 hours, there hasn't been really a big difference between the price of Bitcoin, if it's going up or down, because the shorts and the longs are not, it's not really big. There are times when you will see shorts going as high as 55 or 60%, and that's when you see Bitcoin dumping really hard. So when you come here, you want to know what direction you should be trading to. Is it the downside or the upside? And you come here and you see the shorts. For example, if you see 55%, and you look at your chart and the chart is telling you the price is dropping, you look at candlestick is dropping, then that's a sure confirmation that the price is going down. So when you use all of this to trade, you will hardly go wrong. You hardly go wrong. Just look at the percentage, the amount of money that shorts are trading with. They are trading with $3.1 billion. The longs are trading with $3 billion. That's really huge. And if you just look at coin market cap, the whole market cap of Bitcoin itself, in the last 24 hours, you notice it's actually $30 billion in the whole market volume. But $3 billion is pretty huge. And so if you combine the short and the long, it's about $6 billion. But then this gives you an idea of where you should be trading to. And if you look at this right now, it's the same thing for Ethereum. And there's actually something you will notice with Bitcoin and Ethereum. You notice when we're looking at Bitcoin, it was 50.9%, the shorts, they had the advantage, and the longs were around 49 point something. Did you notice that Bitcoin, those who are shorting Bitcoin and those who are shorting Ethereum, it's very similar. It's really very similar. And that, if you have noticed really in the market, when Bitcoin moved from 9K to about $13,000, did you actually notice that only Bitcoin and Ethereum were really moving? So Bitcoin chart and Ethereum chart are really very, very similar. They move the same way. If Bitcoin is going up, Ethereum is going up. If Bitcoin is falling, Ethereum is falling. So that also gives us a very good idea of knowing what Ethereum wants to do, really, because if Bitcoin moves by 1%, it takes about a couple of hours before you start seeing Ethereum move. But the point is, if you're longing or shorting and you see Bitcoin move to the upside, then you know you should be getting in on the trade, on BTC going long. So why this is actually really useful is it tells you what you should be doing. Should you be shorting? If you see that the majority of persons are going short, then you should be going short. And if the majority of persons are going long, then you should be going long. However, if the short right now, the short is not so superior to the long, that tells you that it could either go both ways. It could go, the longs could just take advantage. That is, more persons could just be longing in a few minutes, 1 hour. They might just be taking advantage of the market. So if there is not much big difference and you want to short or long, even if shorts are having advantage right here, then you should just make a quick move and get in, make profit, get out. Don't stay too long. And what you're seeing here is sell, sell, sell. So if you really want to use this, it's telling you should be shorting the market. In the last 15 minutes, 5 minutes, you should be shorting the market. You should be going down on the market on Ethereum. And do you remember while we were looking at Deribit, you noticed it was going to 312, 313, 314. But look at what happened. A red candlestick came out, and look at the price right now. And so that means people are shorting, and that's why the price is dropping. So this is just a quick way you can actually quickly come and look at the price if you want to know where is the direction of the market going to go. Is it going to go up or is it going to go down? If you're using coin farm, it really gives you that data really quickly to know where you should be trading to. If you come here and you see sell, then you short. If you come and you see buy, sometimes it can be a buy, and sometimes if the market wants to really dump really hard, it's going to go to strong sell. And that's when you see a very bad candlestick like the one we're looking at here, when it went from here down to here. At this point, if you were looking at coin farm, you'd be seeing a strong sell. That's, you should be selling, don't long. But when you come here and you see buy, then you should be seeing this kind of parabolic or bullish candlestick. So this is just a quick way for you to quickly know what you should be doing. Should you be buying, or should you be selling? So if you remember, when we're talking about buying, we always mean you want to buy that the price will go up, you're longing. So when the price is going up, you're making profit. And once you want to short, you click sell. That means you're shorting the market that the price is going to go down, and as the price is going down, you're also making profit. So coin farm here is what will really help you to quickly have that idea of what you should be doing. Should you be selling or should you be buying? So it's like I said, it's just an introductory class, but I know we may have heard or learned something that are pretty new. So in our next session, we're going to really dive deeper into how to use the different time frames. What time frames should you be using when you're trading? You can see the different time frames here. There's a certain time frame you should be using if you're leveraging. So in the next session, we're going to be doing all of that. So this is how far we can go. I did say it to be 1 hour, but there's really so much that I really want to show everyone. So that's why I've really been showing everyone the different methods you can use to tell what direction the price is going. Is it going to the upside or is it going to the downside? So in our next sessions, we're going to dive deeper into what you should be doing when you're trading.